Espresso.
Hello, everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacino, who will be on shortly. How is everyone doing? Did you
Turn now,
follow
you
the
prick.
quarter end afternoon rebalancing sell-off? Big
He can hear me.
rebalancing into the
People can't.
afternoon. Other than that, it's pretty much an orderly pullback. By the way, tomorrow, remember, is non-farm payroll, NFP, on Friday. And we also have the ISM manufacturing PMI. So we'll be on our toes for tomorrow. Again, we'll have a live stream on the 30 minutes before the open to take a look at the price action and help fine tune our levels. Real quick, you can see things turn pretty red in the afternoon across the board for the most part, except for some travel stuff. But everything else pretty much across the red across the board. FOMC still just around 68.8. Gamma area just dropping below that 45, 48, 45, 50 area. Just a little below there. So barely shifting to negative gamma territory. We'll see how that plays out tomorrow. All right. So with that, by the way, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please like the videos and subscribe to, or comment. Sorry, you're already subscribed. And with that, I will bring on Bob Iacino, the one, the only, the myth. There we go, the legend.
I'm not a myth.
You're not a myth. You're
I'm
more
a real
like mythical.
Human being. I'm a real human being, Mike.
So, what's new in the world, Bob?
Well, nothing good in inflation with the PCE figures today. If you want to throw those up.
Did they make you want to throw up, or did you just want me to throw them up?
There's just nothing good in there. Like there was some commentators, specifically financial news channels tend to lean a little bit politically left, oddly enough. Not all the people on them, but the channels themselves. And they were talking about it was good news for the Fed to see that little 0.1 dip in that year over year PCI. But it is, first of all, this is core, and it doesn't include energy, right?
And it's pre-Ukraine war.
Pre-Ukraine war, and it doesn't include food. Because core is X food and energy, and it's 5.4%. Huge number.
And it beat the previous also. I mean,
yeah, it beat the previous. And the other little one that I see in there that I was talking about with somebody this morning is look at consumer spending.
Yeah, where is that here? Where did I see it?
It's there in the list. It missed expectations.
Yeah, I know it missed. Yeah, personal spending. There it is.
Personal spending. I'm sorry. Personal spending. So I've been talking for a while now, Mike. I'm about to text you something. I've been talking for a while now about how the Fed is tightening into weakness. Okay. And consumer weakness is what we're talking about. And if consumers' personal spending had already started to drop a little bit before the Ukraine war, then that means it was before. Actually, what's the month on that, Mikey? I've got it in front of me too. The personal spending number, the month is, where the hell is it? Yeah, February. So it's pre-Ukraine war. Okay. So that means people were slowing their spending habits already based on the inflation that wasn't Putin's fault. By the way, Davey, 2's 10 status, I think it's 2 basis points. So anyway, personal spending is starting to slow. All right. Personal income came in as expected, up 0.5 versus an inflation, which month over month was up 0.4 on the core. Okay. The price index is up 0.6. So that means companies are eating 2/10 of that. That's a very simple way to think of it, right? The price index is sort of an overall pricing index of where corporations say their pricing should be. Okay. So they're eating 1/10 of it, 2/10 of it pre-war. I was listening to the CEO of Michter's Bourbon because I like bourbon. And he said that cork, they used to get cork from Ukraine. They had to source that from Argentina. Malted barley, two of the big malting plants are in Ukraine, currently unavailable. We know the planting season is coming up. Christoph has been very on top of the agricultural damage being done here. So if you've got this in the face of personal spending, it's a very small number, right? It's not a big number. It kind of falls in the medium end of the spectrum. But then when you look at the composite PMI and the trend that it's going in, right? Now, the reason I look at composite in the US is manufacturing has been rising, but we're still a 70% services economy. So we really should probably look at, that's what I texted you, Mike, was a chart on the composite PMI. It's on a legitimate downtrend there. Okay, and these little intra-week or intra-month spikes don't really matter that much. Ignore that red line at the bottom. I think I accidentally drew that. It's on a downtrend on composite. So when you're looking at ISM, that's sort of the direction of the overall economy. It's manufacturing and services at the business level. And it's on a downtrend as well. So all of this in the face of Fed governors saying we'll probably do 50. I don't know, man. I know people love this rally, and we're looking to put on another position tomorrow if we can. We've put on a couple, stock-wise, ETF-wise, I should say. Tomorrow will be a stock. But yeah, we're being nimble. We're using our stops, and we're not over-investing in individual equities.
Is that an espresso?
It is.
Oh, very good.
Yes.
Let's see who else is in here. You already said, hey, Davey, we'll take a look at that chart. Hey, Ken, Sugary sends greetings. Maybe, I don't know if we'll have time for that today, Abraham, but we can get to it at some point. Bob, Mike and Bob. There, I had to get them in the right order. Hey, Lori. Hello, Wavy. Timing is perfect. GME, 15% stocks, up 15% on stock split. You know, how come GME? I mean, how come these companies like AMC, the ones that are squeezed and everything else, and all these things that are just on the crap list of companies?
Oh, my God.
I don't even know what
Stock
to say.
split?
Huh?
Why do they need a stock split?
Hold on. I got to actually look at this. Wait 1 second. I know I saw that it was up. Yeah, it's it's probably going to make a double top. And when it sells off, that's going to be the short ladder attack. So you watch. We're going to predict when the next short ladder attack is. Why do they need a stock other than to juice the thing?
That's just it, to make it cheaper so people can buy more.
Well, I just give up. I give up on these markets. Can we just crash and flush out all the garbage, please?
It's really what I want to see. Unfortunately, I don't want to see people get hurt, but it's just one of those things. It's like you can't. Again, when I'm watching the sort of, there's a couple of meme people that I follow on Twitter, just because I connected with them on other things. And watching them say one day AMC is the most active stock in the index, or on the exchange rather, then the next day when it's falling, they say it's the most manipulated stock on the index.
So when it's falling, it's manipulated. When it's rising, it's not.
Correct.
Even though it's rising based off of all the crap going on with the gamma squeeze and all the Reddit people and everything else, that's not manipulated.
No.
But when it's falling, it's manipulated.
I mean, the idea, again, like initially, I think they did a legitimate thing that was, fairly legal, probably fell within lines of what professionals do all the time, which might not be legal, but, when they tried to trigger a short squeeze on some of these stocks, and they were somewhat successful. But the idea that now the hedge funds have not adjusted to retail doing this, plus the crowd's a lot smaller now that their jobs are back, the idea that they haven't adjusted to this, that they don't have strategies where, they start to bid it up a little bit in order to buy cheap calls, and then they let the frenzy drive it back up and they get out of those calls.
Well, then you get the anonymous post on the Reddit board that says tomorrow.
Yeah.
Oh, and all the big
tomorrow.
guys are already positioned with all their.
Ridiculous.
It's the they. They're doing it. Oh boy, I have nothing to say with these markets anymore. Besides, no, we can't change our name to tactical trading, but you have to approach it to tactical trading right now. It's not just.
Do you have any meme makers in here?
Do we have any meme makers?
Anybody that it's able to make GIFs?
I
want a GIF of Will Smith slapping GME.
Will Smith slapping GME. Can anybody do that?
I just want to post it the next time it's down big.
And even AMC, you can make one of each, whichever one's down first.
If anybody has the ability to do it, you get a free copy of our book.
Putin says that those unfriendly will have to pay for natural gas and rubles. What are your thoughts on oil and natural gas? That's a good transition.
Okay, so I know people got all upset when Trump said that Putin is a genius. He said it wrong. This is a very, very smart tactical move by Vladimir Putin. People are not going to pay in rubles, okay? But Gazprom, the Russian bank that's involved in the energy sector at the highest level, has not been cripplingly sanctioned yet. That was in the whole sanction package where they said we're going to leave the energy out. I can leave the energy sector out. So Gazprom is still able to operate. So what Gazprom offered basically minutes after this, Putin signed a declaration that said they have to pay in rubles. Some of the countries said that's a breach of contract, and I actually spit my early espresso out when I heard somebody from the EU going, that's a breach of contract. I'm like, what are you going to do? You going to sue him? He just invaded a country. You going to sue the guy?
You think he's up for those contract terms?
I'm pretty sure he doesn't give a royal shit about the contract terms.
Blowing up another country. But let me follow the rule of the law with this contract. Is that what you're saying?
I know. It's like, can we do this? No, it's in the contract. We cannot do it. We can't do it. So he basically, Gazprom is going to accept payment in euros, convert it to rubles, and pay Russia. So Gazprom basically it puts a shield over Gazprom from a perspective of future sanctions. Because now if you sanction Gazprom, you basically take gas away from Germany and Finland and some of the other countries that rely on it. So it's a pretty spectacularly smart move, because I'm calling them the Allies. The Allies didn't sanction Gazprom. So it's gonna work. Europe's not going to have to pay in rubles, and Russia's going to get rubles.
Eric asked, possibly the end of the petrodollar.
What, the ruble?
No. Well, I mean, there's you might have a little split between China and Russia, and a lot of
it's already happened.
Yeah,
it was 3 years ago that Iran said that they'll transact in euros on crude oil. Well, it was actually longer than that. It was as Trump was announcing that he was going to exit the joint compromise, which is known as the Iranian nuclear deal. As Trump was saying he was going to exit that, Iran announced that they'd accept payment in euro, and they advised other nations in the area to do the same thing to protect themselves from undue influence by the West. So, and now you've got China and Russia dealing directly, and I'm sure they're not dealing in dollars. So I don't know if I'd call it the end, Eric, but it's certainly moving in that direction. Yeah, we just bought silver.
Yeah,
not physical, but
I mean, so it's not silver and gold. I mean, I talk about it all the time, trading around a core position. Because why do I like to trade around a core position? Because you get the run-ups, you lighten up, you pull back, you can reload on it, and as long as it's in this huge macro range, I mean, look at this range that it's been caught in. Now it's more at the upper end now than the lower end. But until it really breaks above this 2100, then you just go on for the ride. Until then, it's just back and forth. Same with silver. Silver's got its ups, its downs, but look how long it's been in a huge consolidation pattern since. Hold on, Bob dropped there. Bob's back.
I'm
look
back.
how long it's been in a huge consolidation pattern since when it entered that in July of 20. So we could be going on 2 years before you really break out this range. It's why I like to still trade it around the core position. And then once you hit breakout, you stop trading around the core position, you go on for a ride and you add aggressively on pullbacks. But until then,
I did a Bloomberg interview yesterday, and they're like, "Can you tell us some stocks you're in?" And I'm like, "Well, how about commodities?" I can tell you about gold, silver, and uranium, and Raytheon. That's about it.
Well, I think it's and these commodity plays. It's going to be interesting because, especially, I think there's going to be some great agriculture plays coming up too. Also, Hey Lauren, years ago there was a rumor that Saddam had been selling for currencies other than the U.S. dollar prior to being invaded. Price to pay for violating petrodollar rules. I don't know. Do you remember anything about that?
I do. I remember hearing that the whole point of the invasion, that the whole point of the made up WMDs and all that was because he had started transacting outside of the US dollar ban, so to speak, or outside of the petrodollar. I don't know if I buy that or not. That's a little bit of a, I'm not a foreign affairs expert, so I don't know if I buy that or not. You would be hard pressed right now to invade Iran and invade China, find any reason to do so. So, yeah, I don't know if it was ever proven that that was actually the case. I know it was proven that they did not have WMDs, but other than that, I don't know what was actually proven.
Jake asks, do you trade around the core positions with levered instruments too? You can. I would not recommend anything though with like short-term weekly options. The timing is way too tough. You can still do it with it's fantastic to trade around it with spreads because you can also, if you go out a little longer with the options, you can offset some of the theta by putting on a spread. And and we're going to want to target your core pullback levels. I like doing the harmonic retracements and core levels and then significant levels within those. And then that's how you structure, either a call spread or a put credit spread or something else, depending on what you're targeting. And then on the bounce, you look to unwind it. Just use your strikes based off some of your key levels and don't get too insane with them. But yes, you could do it. It's just you have to be a little more accurate with the timing. That's the challenge. So it increases your level of precision. So what else? What else is your take now that we've hit quarter end? We have the little look at this two-day sell-offs. Is this the top? Are we going to new all-time lows or new recent lows? Is this? I'm so tired of that question. By the way,
can you pull up? You can't pull up a quarterly, can you? I can pull up a monthly. Can you do it quarterly on that platform?
No, I can pull up a monthly though.
So let's pull up a monthly. It's the first down quarter in a while. First negative.
Here's your quarter. I mean, you're doing your candlestick math on these three bars.
So it's the first down, actually round quarter in quite a while. And we've actually got a full January, February effect. It is now less likely that we get a positive year, much less likely. Probabilities drop by about 13 or 14%, although they're still above 50%. Somewhere in the range of 7.
Not a new high, a positive year.
Correct. A positive year versus the start of the year. So, so that's a thing now. So it's a good opportunity. If you're trying to prove your worth to somebody, it's probably a good year to try and do that. If you got a family member, you're trying to say, hey, just let me trade your money, turn out positive this year. And you got a good chance that you're going to beat them out. One of the things there was an article this morning about the Dallas Fed talking about a housing bubble And I wanted to talk about that a little bit because I had two TV interviews today, and it was the subject of both of them. Actually, one of them was asking why I sold out of all my Bitcoin. I'm out of all Bitcoin now. The housing thing, the median home is now around $511,000. I mean, wow. So rates are rising. Now, just some back of the envelope historical math. Based on the average median income, which around, I'm putting it up here for myself, which around 2019 was 79,000. I'm sorry, 2021, the median income had risen from 78,900 to 79,900. So that's the median income in the US now. Based off of that, with interest rates at about the lows, okay, 30-year fixed, a little bit better than 2.3, 2.4%. A little bit higher than that, based off of what the historical median home sales price to median household income ratio was, which was up around 5, a little bit more than 5, like 5.4. The median home price should be about 431, and it's 511. So it's reached the all-time high of a little over 6. Okay, that's ratio of your average annual income to the median home price. For every 1% hike in interest rates, median home, again, should drop around $40,000 with this kind of median income. We've gone up about 1% since then. And according to the Fed, we're at 511. The median home price should be 407. So houses are overvalued. Now, does that mean there's going to be a crash? It does not. Because we don't have, let me rephrase that. There's not going to be a housing price crash like there was in 2008 because we don't have, what are they called, Mike?
What?
Those crappy loans.
MBS, the mortgage-backed.
No, oh God, why does the name of those loans escape me right now? Subprime.
Oh, you don't.
We don't have a massive subprime loan bubble right now. We do have problems in the credit market. We have issues with the MBSs. Housing prices are going to fall in the medium term. But given that housing prices are so much higher than what their normal ratio would be to the average median income, and I don't know what the 2022 average median income is yet, it makes sense that it might have risen to about 81, which would bring the house price up as well. But as interest rates bump up, you should lose $30,000, $40,000, $50,000 per median household or per median house price. And I don't know if we're going to do that because inventory is so unbelievably low. And that's why, as Mike knows, I've started to look at some of these residential REITs as potentially a position for us. We haven't found one that the chart looks good yet. Well, let me rephrase that. Mike hasn't liked the charts on any of the fundamental ones that I've liked so far. So I'm going to keep looking, or we'll keep looking at the charts. But it's something to think about because in times of stagflation, you got healthcare, real estate, and gold do well. So if you're not somebody who wants to hold on to a bunch of commodities because we might have stagflation, you might want to be looking at either actual real estate or real estate REITs.
So now, if we tip into a recession and people, what they're paying up now for is, you're paying up a bigger percentage of your take-home income on housing, food, everything else. And then if there are some layoffs, because we have record low, we have very low unemployment, but there's a huge gap there due to, I think it's based on a skills gap more so than anything and again, so you still have some lower end that can't get filled, but overall, what happens if we start tipping into a more major recession? Inflation doesn't go away, and then I know housing inventory is low, but if mortgage rates stay up there for a while, and then you get arms adjusting higher, Could there be additional downward pressure on housing?
Yes. And the thing is that where you're going to find that is in not new home sales, but just the Case-Shiller home sales index, which is all homes. New home sales have a very hefty built-in profit margin based on economies of scale, cost of inputs that these big builders like Lennar and Pulte can achieve. Pulte was just downgraded this morning, which I found interesting because those are the ones that are likely to sell for two reasons. Number one, people are going to be stretching to begin with, so they're not going to want to buy homes that they need to work on unless they can do the work themselves. And once Pulte or Lennar or any of the others build these homes, they need to get rid of them, especially at higher interest rates. And they have a hefty profit built into them, and they will slash and burn until they get out of them. If they break even, the company survives. The stock gets hurt, but the company survives. An individual who needs to sell his house will have to slash their prices even more. So that's likely where you're going to see the bigger price cuts because people won't want to move into a house that they're already overpaying for and then have to go to Home Depot or Lowe's or one of these other places and spend $40,000, $50,000, $60,000 to get it going. So that's basically what is likely to happen if we slip into a recession or even in the current scenario. Is people who are waiting for housing prices to fall to get into a house, you're going to want something that that a homeowner is selling, not something that a builder is selling. At least historically, that's how it's played out in those scenarios.
With housing price supplies falling, I must get 6 calls per week inquiring to buy my home. They're all looking to purchase under FMV.
Under fair market value? Is that what he means by that?
I guess. Could you clarify?
Does he mean under or over?
Yeah, just could you clarify that? Let's see. What else? All right, so we touched on housing. So fair market value, but so it's still they're looking to purchase under fair market value. So they're not chasing their home down for over fair market value.
There's two ways to look at fair market value. And I mean, I'm not an active real estate investor or anything, but fair market value is what someone will pay, not what they recently sold for. So you got to be careful about that. Like real estate agents love to send you out comps, but if nothing is sold in a week, the comps can be 10% lower the next time they come out. You got to be careful about that. And you got to be careful about what a real estate agent tells you your land is worth or your home is worth. And there's no real better way to do it than comps, right? But let's see. I'm confused, Ramsfall. If there's bidding wars taking place in every home in your neighborhood, why do they want to buy yours under fair market value? Or is he saying there are no bidding wars?
Because around here, it's insane around here. I mean, a house comes on and there's multiples over asking.
Yeah, and listen, that is going to end.
Yeah.
So, I mean, if you're somebody who's like, nah, I like my house, I like where I live, I'm staying here, these prices will go away and you'll wish you sold.
I'm trying to sell mine in a shortly.
Yeah, but contractors are offering under fair market value. Okay, yeah, screw them. You don't have to do that with contractors. But again, fair market value, man, I mean, we're talking historically. Homes are about 20% overpriced historically versus median household income. Okay, so fair market value, I don't know. What does the RSI indicate, Mike? Overbought, oversold. Housing might be overbought. It might be in overbought territory. People fall in love with their homes. This is something that I found. And I rent right now. And I've owned homes in the past. And I know that when people offered me less than what I wanted when I was selling them, I was offended And I looked around, I'm like, well, they sold for this much. I got to be able to get at least this much. It's not usually a really, unless it's Mike Arnold, it's not usually a really unemotional conversation. So it's difficult to say what fair market value is, Ramsfall, because it changes the very next sale. Fair market value is what someone will pay you, and that's all it is. And I know you know this, but it's just like when you're looking at a stock that's absolutely cratering and you're like, it's worth more than this. Yeah, you're probably right, but you can't sell it for that. Right. And then we sit here and we look at GameStop and AMC, and we're like, there's no way it's worth this. Yeah, but it is, because that's what you got to buy it for. So I just hesitate to give any advice on real estate, but that's my take on it. I look at real estate, because I'm not an active real estate investor, as one friend of mine said, do you think I should sell? I said, absolutely. I think you should. But if you love your house and you're happy, go ahead. He's made 100% in 9 months. That just doesn't historically happen. That is not fair market value for his house currently. It'll probably get there in the future, because real estate over time just goes up, right? For the most part, especially as they print dollars. Anyway, we went on too long on that already.
Well, there's our housing conversation. Anything else you want to cover, like anything with the stock market, or are we going to new lows anytime soon?
Yeah, I don't know if it's soon.
We're going to new lows, but the timing's the question.
Yeah. Somebody asked me recently if I thought, what do you think about this new bull market? I'm like, well, if it becomes a new bull market, yeah, I'm pointing to the Nasdaq and the Russell. It only becomes a new market when new all-time highs are made. That's the only time you can get out of the bear market technically. So we're in a bear market, okay, in Russell and Nasdaq and many individual stocks. Did Apple go to new all-time highs? All new time highs?
No, not yet.
Okay, so Apple is still in a bear market as well. So these are, there's definitions to these things. And this is still technically a bear market rally in Apple and in the Russell and in the Nasdaq. And it doesn't matter to me, like, people have this idea that like we get embarrassed if what we say turns out to switch it. Like, how do I say this without sounding like an arrogant asshole? We can't possibly be wrong, because we don't stake our intelligence on this. But somebody said to me, so you still think it's a bear market? No, it still is. Okay, because these things have definitions. Jim Cramer comes out and says, the bear market's over. You've been warned. Okay, it's not, but sure.
Hold on, wait. Cramer said that?
Yeah, Cramer said the bear market's over.
Can I start shorting futures yet?
You know when he said it? 2 days ago.
2 days ago.
Yeah, 2 days ago he said it.
He's a great contrary indicator.
He really is.
Like if he says, oh man, I love this stock, I'm like, oh crap. I got to move up my stops. I'm doomed.
So you take like what the Fed is currently, look, this rally right here, given what's been going on with the level of rates and the yield curve and everything, just emboldens the Fed to be as aggressive as they need to be. They've got a larger cushion now. So I think they're going to get really aggressive. And I think as things reprice and as consumer spending falls, you're going to see a bunch of people over the next, let's be aggressive, let's say 3 to 6 months. You're going to see people start saying, well, now things have changed because, the Fed actually did 50 and consumer spending is starting to slow and, earnings are starting to be guided lower. And then people are going to be like, you guys said, well, no, we said it was a bear market still. Now if you that's funny. And then if we get to a new all-time high in the Nasdaq and an all-new time high in the Russell, somebody says, still think it's a bear market? No, it's not anymore. It's literally like saying, is your car still white? Yeah, I haven't painted it yet. So it's still white. But then you paint it, it's like, what is it now? Well, it's black. I painted it. What do you mean? These things have definitions. And I stick to the definitions. And if we have a trade signal, like we potentially do tonight going into tomorrow, then we do that trade. It's really simple.
Yep. How about a GIF with Will Smith smacking Kramer?
Oh, yeah. You get 2 free copies of the same book, which is an ebook anyway. So what's the difference?
I'll give away if somebody can make some good I'll give away a course for that.
There you go. Give away a course.
I will give away a course if somebody can make some good animated GIFs with that. So
It's got to be Will Smith smacking something funny.
and that's for anybody. If you can always reach out to us via social media or via email. And if you're watching this on replay, you think you want to do something like that, and I'll give away a course for it.
Yeah.
That'll be worth it. That'll be worth it. We didn't touch on this. Thoughts on like notes and bonds and everything else?
Well, I mean, they're doing what we said they would do, right? We said that they would rally back up to the rotation zone and probably up to the 50. They've done that. Now, we might be setting up for a double cross for higher rates, but I don't think so given the current climate fundamentally. I think we're talking about lower rates for a little while until the ultimate collapse comes. Hey, by the way, guys, I talked about that podcast, right? And I'm saying this for a reason. The first recording of the podcast is going to take place tomorrow. And it's just going to be me and Jim Iorio and a guest. And we still have yet to slot in a spot for Mike on a regular basis. We're going to do that. It'll be a technical spot. But the second one we're doing, which will be April 8th, Friday, April 8th, is with a guy named Kumal Shri Kumar, who is just an insanely good interest rate strategist who's been right basically the entire last 3 years. And he's not a timing guy, okay? And he's still calling for higher rates, and I agree, but I do think that those higher rates, I think we're going to go sideways here for a while as the yield curve inverts. And then the Fed gets aggressive. Now, if the economy slows, we might have seen the high end rates, but that's not my initial call. The Fed has to drive rates higher. And if they drive it to just a brutal inversion, then they'll stop hiking rates, driving longer rates higher because inflation won't be under control. And that'll be from the 10-year out.
Well, and so far we hit the first and second targets on this double bottom, 4-hour double bottom. So at this point, and see, we're still against the daily rotation zone, and we're not even close. I mean, this is how insane it is. Look at that weekly rotation zone.
Yeah, it's high up there.
This was really overextended. So we shall have to see what kind of bounce, but with that double bottom that triggered, got the pullback move, first and second targets already hit. So worst case is stops at break even at that point for the little final amount. Anything else you wanted to touch on before we wrap this up with your session up?
That's it. I mean, obviously we're watching the jobs number, but the jobs number has kind of lost its importance. We already know that the Fed feels that they're at full employment. And, a lot of analysts agree that this level of unemployment, because again, they don't look at the U6, but this level of unemployment is full employment. So that would be the only thing you would look at. If you start to see the employment rate creep up, you would likely see it permeate through the markets that the Fed is not going to be able to raise aggressively. But I still think they will. I think they got basically the okay to fight inflation and the political okay, and they need to do it.
And we got ISM manufacturing PMI tomorrow.
Mm-hmm.
Beat or miss?
What, ISM? It's going to miss.
It's going to miss?
Yeah, it's going to miss.
Forecasting 59. So you heard it here first. You can trade off that info according to Bob. Just kidding.
Well, I mean, expected at 59, the market doesn't necessarily act directly versus expectations.
No, there's no trade. That's why that was a joke, just to reiterate.
Hey, This house I've been keeping an eye on here just dropped by $10,000.
That's all right. What percentage is that? Because if it was a $10 million house, it really doesn't matter.
No, no, it's a 10% drop. It's a $500,000 house. It's a little bit less than a 10% drop.
So, like just under 50?
No, I'm sorry. It dropped 10,000.
Okay.
So no, it's a lot less than that. My bad. It dropped 10,000. It's like a $500,000 house.
Okay.
I just did my math backwards.
So that would be like 2%.
Right.
Gotcha.
So it's a 2% drop.
All right.
Which kind of matches the hike in interest rates. It's getting there.
Which is it's time to buy.
Not yet. Not just yet.
What would you? That's 2% in my pocket.
I have a friend. This is the last thing I'll tell you guys, and then I'm going to go. I have a friend who we call him the indicator, because on a personal level, every investment thing that he does is wrong. So we call him the reverse indicator. And well, not everything, because he bought a house down here in Southwest Florida. He got a huge bonus, and he decided to put all the bonus as a down payment on a house. And he did it, and he got a house. It's probably a little bit more than he can afford, but rates were low and interest rates were low. And this was pre-COVID, right? So without COVID, it would have been a mistake because he's the reverse indicator. But COVID brought so many people in his sort of, it's a luxury house, not a mansion, but it's an upper level house. Brought so many people down to Florida at that level that his house is now doubled. And he's the same guy who said to me, should I sell? And I said, yeah, I think you should sell. Your house is up about 95% in like 19 months, and that just doesn't happen. So when I see something that doesn't happen, then you know it probably is going to go away. What does Brad Pitt say in the movie Snatch? He says, we have a saying in Maynardville, Tennessee, if something sounds too good to be true, it ain't. Right? Well, this sounds too good to be true, so it probably ain't long lasting. Anyway, so what did he do instead? He took out a well into six-figure home equity loan. So $200,000 to invest in something else. So now, and he thinks he might invest it in more residential real estate. So what is that, triple leverage, Mike, or is that double leverage?
Well, he's leveraged.
Triple if he buys another house with it.
Yes, if he goes back into real estate, it's triple. Right now, he's double leveraged.
Yeah.
Oh no! So I better get my house in the market ASAP. So, all right. All right, I'm going to let you go.
Yeah, I'm going. I'll talk to you guys. I won't be on Tuesday, but I'll be on tomorrow after non-farm if you do it, Mike.
I'll be on live stream. So just
I've got a 8:10 Eastern time TV spot. So as long as it's after that, I can do it.
The countdown starts at 8 Central, so it's 9 Eastern.
Okay, that's no problem.
I'll be on tomorrow morning.
Yep, I can do that. That'll be my replacement for Tuesday. So I'll see you guys tomorrow morning or Thursday.
Okay. Thank you.
Cheers, guys.
Hold on one second. There we go. All right. So I'm just going to I am super tired. So I'm just going to go over, I'll just show you interesting play this afternoon. Interesting play, just so you can, we had the double play this morning. There's a little double play this morning, went to full target. So I left that on there. Coming back down with the reverse harmonics, stalling out here. Then we got momentum bars. This momentum bar was fantastic this afternoon. Momentum bars, you see how they're not overlapping that much. One pausing bar and then momentum bars. That's the exact thing I like to look for from a breakdown shelf. So, and you also know I follow the, especially late morning, I shift to the 15-minute. I was trying to show momentum bars on that 5-minute, but you see here breakdown 15-minute rotation zone, 15-minute rotation zone, and then breaking this little support shelf this afternoon. And you can see the momentum on the 15-minute into the close. Just wanted to point that out. So now, based off this, we've had an order. This is pretty orderly. I mean, it was a slightly bigger sell-off, but we're finally reconnected with the rotation zone. Uh, Again, I'm going to watch price action tonight to see if we have any more pullback room. The next major area I'd be watching if we did have more pullback room is, let's see here. There we go. Is the 200 on a bigger pullback, although we have a really strong support shelf about 45.07. Then we will, I mean, unless something just falls out of the market, we'll get some kind of bounce. It could even be tomorrow, April 1st. That would be a funny April Fool's joke. By the way, I hate April Fool's Day. So I've never liked it. I'm going to be watching on this next bounce how strong it is. You probably, the longer term people already know. So at this point, in order for me to get super bullish again here, that doesn't mean there can't be a bullish trade. I'd have to get back above at this point about 45.92. So that's a ways off. Now there will probably be a bullish setup, which is what I'll watch for the overnight session, or if we continue lower tomorrow during the day. And then when we get that bullish setup, then I'll be watching, and seeing how much we can really bounce out of it. Now it's still in contact with the daily rotation zone, so it can still easily rotate back up, even if we pull back more. So far, 1-2 day pullback. I like this pullback now, but there's nothing actionable just yet. Nasdaq, not quite back to its rotation zone, but close enough. Again, also with your Nasdaq, there was a little double on here this morning. You can see coming up, full target hit. Same little difference, although sloppier. There just wasn't the great apparent momentum bars until it really got here, but all the selling happened at once. So that was not easily tradable versus the S&P. Nasdaq again. If you're watching something overnight, I'd just be watching about the 50 in the Nasdaq and in the S&P. If we break below that, we're at the 50, but if we break down about 45.13, because if we start getting below there, you can continue a bigger overnight pullback. Dow, again, into its rotation zone and the 25% pullback. Next key area I'm really watching is about 34.11. If it breaks down from there, it lost its 200 again, so now that's technically resistance, but I'm going to see if we do bounce tomorrow if we can regain the 200. So let's see. Let's take a look at a couple stocks, and then we'll fine-tune this stuff tomorrow morning. Again, let's see. Again, remember, we talked about this. Let's just review this because this is a great concept. A close below the 62.5. What does it favor? Lower prices. Got the little bounce rotation zone. So I said if you were going to try a long play, you got to keep your stop below the 62.5 because just because it's on a channel line, you still have a declining rotation zone on the daily, a declining rotation zone. And what shifted this more bearish? Remember, we were watching for the full gap fill. We got a partial gap fill. Didn't even get back to key resistance and then rolled over again. So there's still increased selling. Now, is this a potential double bottom? Yes, it is. You can really see it on the weekly. Could it go away before it ever triggers? Yes, it can. So would I just be a buyer there? No, this is why I wouldn't even front run this yet. I mean, there could be an aggressive buy on tomorrow morning above this 4-hour high, but that wouldn't be to run it all back up here. That would just be to run it into the rotation zone. Okay? Because this is, this is why you have to really be careful with trying to say, okay, if this is a double, I might as well buy now. Why? Because if this goes down to 290, or I don't know what the exact price is to invalidate it, let's just say 280, it's off the table. It's no more double. So let's say you bounced a little and then, oh, I'm a buyer down here. Roll over. Boom. Did this ever matter? No. So, yes, we do have a potential. And it's a long way off from triggering. There could be a great buy setup before that could trigger as a little aggressive move to get in slightly before it triggers, but it wouldn't just be blindly buy on the open and say, okay, I hope this thing triggers. Because where's your stop? I mean, you're sitting here. Now, this is, if you look here, it's already hit that once back in June of 21. Hit it again, testing it again. This is a pretty key level. And look what let me draw a line here. This is where it really helps to look. So we have our daily. Yeah, it's a nice little double setup. Weekly, you're still against the weekly rotation zone. And look, we bounced into the weekly rotation zone, couldn't do the gap fill, and rolled over. What's below this level I just marked? Yeah, you got some chop behind it, but what's right in front of it? That was a momentum takeoff. Okay? So if we go back to that daily, oh, there's something else I wanted to touch on too. If you go back to that daily, you're trading into this. Yeah, you got a couple stopping points behind, like this would be a great area if you're doing shorts around 283 to lower a stop. But this thing could easily get back to the 250 area in a series of weeks. I'm not saying in a series of days. So that's why I wouldn't just be looking to, because even if this bounced slightly tomorrow, there's a quick play, but this is not I buy Home Depot and ignore it, even for a few days. Because in a few days, it could be lower. Because even on a bounce into the 4-hour rotation zone, rotation down. Even on a bigger bounce in the daily rotation zone, rotation down. Yeah, I was just going to do that, Sterling. Thanks. Sterling, he was in Discord today. SBUX. Starbucks. You were asking about, is there a clear path above like this 99 level? Yes, on the daily, yes it is. There's a clear path right up here. There's a clear path right up here. And here, I think you were asking about a bullish trade in here. Here's my challenge. And on the weekly, let me show you something. Yes, this is technically a clear path move. But this jumps out at me, so I got to look at more investigation. Because why is this difficult to trade even on the upside? Because we have so many stopping points. So you can get whipsawed in this. So yeah, above 99, this is a better trade. Below there, it's harder to trade into even on a pullback, because could it be longer term or medium term bullish? Yeah, but you're still against the daily rotation zone with a lot of stopping points. So is this a trade that I want to say, okay, fantastic, I want to jump onto the long side with just with potentially weaker markets, with consumer spending slowing down, with being at a top of overbought again, and this many stopping points? No. Where's the better trade? This is where I don't have to pick a bottom. The better trade would be if it continued to get stronger this can be even over a period of weeks. Let's say over a period of weeks it builds up, it stair steps higher, then we get over this area. That's when I start really watching for the key trade in Starbucks. I don't have to be in here because it could never get up to this area right now. I'm looking for the easy trades, not the trying to call something else. So that's why, yes, technically, especially on a move above the 50, you could get some higher price action. But it's a challenging trade, because you can get back and forth, back and forth, back and forth, and even bigger dips because there's all these resistance points now. And long term, do we have a great long-term pattern? No, this wasn't a great long-term pattern. I would rather see a great long-term pattern on another rollover play and then watch for a better long-term. It doesn't even have to make a double. It could pull back base in the 62.50 area, like get all this short-term crap all the way, and then start building a solid base. So those are my thoughts on Starbucks. Can you look? Hold on, let me see. AMD took a dump today because of price downgrade thoughts. Well, let's start with SMH. Remember, let's look. SMH now breaking back below this little area. Still just a orderly pullback, but you still have the negative rotation zone here. Okay, let me just pull this off for a second. Still, technically, we have that triggered major head and shoulders. So that's just, with that price action in SMH. And then AMD. AMD, see, this is again why I'm telling you to watch the double targets. AMD, we had the double bottom coming up here, completing that double, and then just a rotation back down. Now on the weekly, the daily, this was a little double. On the bigger term, we have already 3 bottoms. We could be testing this for a 4th bottom, and it could not hold its daily 200, which is not good. And by the way, this rotates back down. This weekly doubles off the table then. So what are my thoughts? I don't have anything bullish on a play yet. The only bullish play for a short-term thing would be if we got above today's high for a potential very short-term gap fill. Other than that, look, you're filling. Look, remember this gap that didn't fill completely? Can you see that? This gap that didn't fill, virtually filled today. What else are we going to want to check? We're going to want to check this. Okay, the run-up from this move. What do we just close below? 62.5. That statistically favors a retest of this area. So on any rallies, this would be a potential short candidate, not a potential long candidate. The only little long scalpy thing is sort of a gap fill. Just to reiterate again, we still have you're against the weekly rotation zone. So last week closed just at the weekly rotation zone. Today, this time spiked higher and then's rotated back down. So it's still holding. And now unless we rally back above 120 tomorrow, it's going to close below the weekly rotation zone again. So it's still in bearish mode longer term. And again, this is why we don't front run patterns. Because you could have said down here, oh, look, we have a green bar, we have a potential double bottom, I'm just going to front run it. All right, let's say you bought at the end of this week because you're waiting for the green bar to fill, okay? And look at this. Uh-oh. Now you're below where you bought it because you tried to front run. This is when it's trying to call bottoms early is a very difficult game. So just be careful with that. Can I look at SWN? SWN, sure. So far, I'm just seeing if this last little move up, where it's holding. I mean, right now, I personally wouldn't be initiating a new position in this at this point. If you're already in something, it's trying to correct out of overbought sideways, but even if it makes a slight push higher, we could still have a divergence there, and it's really far off the weekly. So what's interesting with some of these things, if oil slightly breaks down or stays flat, some of these things could start to pull back in the near term. So I'd watch for a pullback level on SWN and be rate depending on what your time frame is. So if this is a short-term trade, you might want to raise your stop more aggressively. This is why it's hard. This is why I can't give individual advice, even if I wanted to, because I again don't know everybody's time frame, don't know everybody's portfolio, don't know maybe you could be in SWN from way back here. You could be in it from yesterday. There's two very different things. Would I be in it now? Because even if it pushed higher, unless oil can really break out. If oil can get above 116 like in the next couple days, yeah, you could see a run on that. But at this level, if oil just moves sideways or breaks a little lower, you could easily see a pullback easily to 632. So just keep that in mind with your time frame and where you want to do your stops and everything else. Let's see what else. Thank you, Sterling. There you go. If anybody wants to join Discord, Sterling's going to cover your fee. Just reach out to me. There you go. That's a wonderful offer from Sterling. If people aren't in Discord, Ken asks, can I cover Tesla holding low in 800s and want to hold long, just not let's just, again, nothing's really changed from when I covered it this morning. You're holding from the low 800s, so you have a lot, and it depends on your time frame. Now, if we start breaking it still below this key area, then short term, it's watching for the pullback. It just depends on your time frame. I mean, if you want to try to lock something in, then this is at a critical juncture if we start breaking lower. If you want to try to stay in it for a longer term, then it just depends on your time frame, because you start breaking in here, I'd watch for a retest of here. So are you comfortable on a pullback to 1010? Have you taken any of your position off? Are you just holding the whole thing? These are all questions. So key area tomorrow, see, we finally broke just down barely from, this is why it's really tough for me to even tell you where to put a stop, because I don't know everything you've done. 1087 broke down below the 1 hour rotation zone. If you start breaking down, the key thing I'm watching is still for that gap fill. And let's just look at these levels. If you want another stop level, right there let's see, 1050 would be close below that triggers the gap fill. That would also be the 50 on the 1 hour. That would be a continued. But if you don't want to give something up, I'd watch this on the open tomorrow. If the market's weak and Tesla's breaking down, it could pull back more. If it holds these levels and gets back into consolidation, so far, this has pretty much been a sideways correction. Why do I say that? Take a look at the daily. 3 days, we're still into the 29th of March's. We still have 2 inside days compared to this. This was inside day to the previous day. This is inside day to 2 days before. So this is definitely a sideways correction so far. But it is still very overbought. Personally, it's very toppy. So if we have market weakness, I personally would be more aggressive with my stop. Okay, because a breakout again, you can always play a breakout play, because I wouldn't really want to ride it back down. But that's where it depends on what you want to do with your position. Let's see. Hold on. Boy, let me try to get caught up. Then I gotta call it a night. Hold on. Hold on. What's next for Cat? Didn't you just Cat hasn't changed since you asked about that before. It's an inside day. You still have a potential double. 216.54. The rising 21's getting out of the way. So if this closes below this level, it's a pullback probably to the 200. For a breakout, you've got a lot of selling pressure up here. I can already tell based off the daily. So for a breakout play, there's not a great level, but I'd say probably about 225, above 225.25 could be a potential breakout play with some momentum. But even it could stall out here and it doesn't invalidate the double. So this favors potentially a pullback, but it's in no man's land right now. Just with all this toppy pressure right now. So I don't have anything else, but there would be no trade unless I was going to do a short-term breakout play above 25.25. Other than that, I would not be shorting it up here because we're still against a rotation zone, but below this 216.50 area could be then a short play or like a put spread play or something else. Can I do OXY? Yeah. It's still with the daily rotation zone. Your question is, will it go back to 60? I can't. I'd have to look at a short-term pattern. There's no short-term pattern that says 60. Unless you see oil, you want to know if tomorrow, if it's going up, you watch if there's a rally in oil. If oil holds or sells off, here's your pattern. Here's your problem. Very overextended, right? This is a head and shoulders. So that's the only thing, and you got the 20 right at the neckline. So you start breaking below the neckline, I would be targeting a bigger pullback. And so that, and I don't like to short these stocks based off what's going on in the world, but that's where I watch for a bigger pullback for a buy pattern. And it's not broken yet, so these levels will have to be adjusted. So I guess you'll have to tune into another live stream, but see, where would that take me on the weekly? That would take me just into the weekly rotation zone. So that would be a really nice pullback on a longer term basis. You can see how overbought it is. Oscillators starting to roll over. So that's what I'd be watching for. Could it pop to 60 tomorrow again and still keep this head and shoulders intact? Yes, it could. Do I have any pattern that says it would? No, I don't. You can see here, 58.50 is your key level right now. So yeah, you can watch it tomorrow morning. If it's trading above there, could make a run for 60. Other than that, the longer term weighting is to the downside based off current price action. Could it all change? Yes. But that's where current weighting is. The head and shoulders has not triggered yet. So could it come back here and then move back up? Yeah, that's where I can't tell you if it's going to hit there because I don't have a pattern that says it would hit there. Also, you want another little tip? Let's see where that, look at that. The 62.5 is right at that 60 level. So it came up to between the 50 and the 62.5% and rolled over again, which is key resistance based off of here. So that, again, it can't get above this key level, which is right where you wanted your, I don't know how you have that target, but that's where it is on the 62.5. REGN. Just roughly see where this went to. I mean, longer term, it's healthcare, strong sector still. You have a really strong sector. Remember, watch my weekly sector overview. So healthcare and recessions do favor, if we're tipping into even more so, it favors it. I mean, this stays even above this little area with a rising weekly. It's a play on pullbacks. Came off its first harmonic, little divergence here. So this is where I'd start watching for the bigger pullback. I'd watch for a pullback and then some kind of reentry signal, whatever you use for reentry signals. I'd be watching back to this support zone into the daily rotation zone with a buy setup. Would I be chasing it up here? No. But if it pulls back, and so longer term, look, you have tried to make a high up here, pulled back. That's not accurate, by the way, anymore. So ignore that fair value. It's changed. Running up here, pullback, retesting, pullback, breakthrough, retest, support. It could even retest again. Retest again. It's got a lot of key support in here. So as long as you don't see a major breakdown back into here, then it remains a short-term, very bullish case. PANW. Again, it's now hit its next stop raising area. Next target is all the way up, 684.50. You might have a double top here and a clear path below. So it's an easy area to move my stop up for this. It'd be below this low. Then I'd start watching for the bigger pullback. Would I be bearish on that? No. Why? Let's just do this for giggles. Let's just do this with. Look, the second target takes you right back to the prior breakout level. So coming down, broke out, little bigger pullback through that. Now, I wouldn't be surprised to see this tested again. Would not be surprised to see that level tested again. But longer term, I'd be just watching for a entry, or if you're not already in it, a potential entry at these, back at some of these keys. Why? Again, because if you look here, boy, I just blanked out on which that's industrials. Well, why can't I remember what healthcare is? Oh boy, I hate when I blank out. There it is, XLV. So XLV, remember, is triggered a longer term double bottom. This system, the long-term system, is still in buy mode. It's run up. We have divergence in the sector. So, and it didn't quite eke out the first target yet, but again, it's still bullish mode. I mean, even if the sector pulls back to 135 area, it's still bullish mode. Okay, so would I be surprised to see a pullback in either in the sector or in that stock? No, I wouldn't, but then it's still in bullish mode. So this is where you're doing your sector analysis and your stock analysis. So you're in a strong stock, okay, in a strong sector. Why do I say it's a strong stock? Because, look, is it a volatile stock? Yes. You can see that in the price action. So would I be surprised to see it back here? No, especially if the sector rolls over short term for a bit and then reloads. Strong stock, strong sector, not surprised to see a pullback. So there you go. Hey, just Sterling, I'll chat with you after this. I'll figure it out. We'll figure it out. But we got a couple. Remember to email me. Email me. Okay, everyone? You got to send me an email. I'm not going to be able to get to it tonight. So be patient. I will get to it tomorrow. Correct me if I'm wrong, but CLF has almost reached all-time high with overbought RSI. And Clifford Cliffs. You know, isn't that a great name? I mean, Cleveland Cliffs. Sorry, Clifford Cliff. All right. Let's see. I'm thinking it will go down and consolidate for a while before it passes the all-time high, but for how long? Well, that's the big question, isn't it? Now let's take a look at this. We have see, this is my problem. Everything rushed into these. Now these are overdone. They're in a lot of this is overdone. And you have a daily double top, which is a great little. So I just put on resistance area, and it's an area around here. I was just seeing where that double would play out, and that's even in front. But look at that double, takes you back to the weekly rotation zone. So now, if it triggers below 80.74, the first target's at the daily, but I'd need a really strong buy pattern in there. But I'd be looking back towards here for a weekly re-entry. Still up at the top with overbought, oscillator rolling over a bit, but still not bottoming. So yeah, does it look like it's topped? What I can't tell you the time because it all depends. Again, this is another thing. It's steel play, and a lot of steel's been looking toppy, and some materials has been looking toppy. So again, where's our... Could somebody remind me where is there? Here it is. Material select spider. Look at this. Are we still in bullish mode? Yeah, it barely avoided a long-term sell. Are we in the strongest bullish mode? No, we're not. We're pulling back to the daily. I don't think this qualifies as a double, but could this easily pull back to 86.27 after this kind of run? Sure it can. This is, I guess we're doing a little class on sector, and so this is starting to roll over. You know, pull back more out of overbought conditions, not yet pulled back into an oversold condition, so there's room to pull back. And then we have CLF, which has a potential double top. So would I be aggressively establishing a long here? No, I'd be watching for a pullback. Could it just pull back to 80.24 without triggering? Could it move sideways? Yes, that's why it's not a short up here yet for me. And I would not short this anyways. I'd just be watching for a pullback. But this would not also be an aggressive buy at this point because of where it is and where the sector's slightly rolling over. All right, everyone. Let's see. I don't think I missed anything. There, you got a little lesson in sector and stock analysis. And I'll give you, let's just look, you have X, right? US Steel. Looks like it's setting up for a double also. Could this go slightly higher? Yeah, before it pulls back. But again, I would not take action on it because if I was already in this, this would be an area to raise a stop. If I wasn't in it, I would not be chasing it right here. See, that just takes it back to this look. There's a major breakout from these levels. Does it have room to run up? Yeah, but it's already come against this. Now this is X US Steel. It's already come up against another area of resistance and stalling out here a couple weeks. So could we see a pullback for a reload pattern? Yeah. Does it still have room to run after that pullback? Yeah. Now we get to double targets and then you tank back into this consolidation. Then I would not be as aggressive. All right. So there you go. William S. and Coco, get me your information. Let's see. Who else do we have? I have to again thank Sterling for that very generous offer and the super chat. So thank you so much. We're going to get some more people in Discord. Okay. And if you're listening to this on a recording and you want to take advantage of that, reach out to me and we will make sure if we have enough slots left to cover Sterling. Sterling's not going to pay for 1,000 people to sign up. Although if we got 1,000 people to sign up, I'll figure something out. And if you do have the funds to do it on your own and you're just waiting for a freebie offer, if you do have the funds, just consider putting them in. Don't put it on somebody else because it is a beneficial site and Sterling posts a ton of stuff in there. So if you're new here and like this kind of content and then I do a lot of free analysis for people. Some people give very generous super chats like Sterling to support it. And if you would like to help, not only by becoming a subscriber and liking the videos, leaving some comments and ringing the bell, but do consider doing some super chats, especially if I do some stock analysis for you. Okay? It really does help the channel and helps cover my time. Until then, market preview tomorrow, 8 a.m. Central Time. We will cover it then. I guess Bob will be popping on to discuss anything that he sees with non-farm payrolls and to give you his thoughts, and I'll be fine-tuning the price action to get us through April Fool's Day, first month of the next quarter, first day of April, and a Friday, so it should be a doozy. I'll talk to everyone then. Bye.